My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey everybody, I'm Bob Johnson, aka Bob Mortgage. Welcome to the Mortgage Report. I do this video update every week so you know what's going on in the market and to help you make decisions as it relates to interest rates, so you know what to expect as you're out there shopping for a home. If you're in the market to buy a home and want to explore loan options and interest rates, give me a call at 214-631-5626 or tweet me at Bob N. Johnson. All right, let's jump right into this week's Mortgage Report. February 3rd's employment report left investors feeling good about buying bonds, and mortgage rates improved over the first half of last week. At one point, we saw the Fannie Mae 30-year 3.5 up 18 basis points. This got us up to the 103 level I spoke about in last week's mortgage report. We got to the top green line in my chart, which allowed me to lock in some of my clients at lower interest rates. An announcement from President Trump last week, Thursday, on his plan to overhaul business taxes was negative for bonds, and we tested the resistance level, the red line in my chart, and we saw bonds fall to the 102.4 level, which was negative for mortgage interest rates. After a couple of weeks with relatively little net change, mortgage rates ended last week positive, a little lower than we started out the week. This week is going to be pretty active in terms of mortgage data and other events. There are some important pieces of economic data scheduled, including a key measure of consumer spending and 2 inflation readings. The big news, though, will likely be Fed Chair Janet Yellen's semi-annual congressional testimony. So what's my position this week on interest rates? Well, there's a couple of things I'm going to be watching. Of course, Yellen's comments. As I've always stated, the market moves based on headlines. I'm also watching stocks. The Dow has managed to stay above 20,000 for a couple of days now. If it fails to hold that level, stocks may be in for some selling, and that should benefit bonds and the mortgage market. On the other hand, if stocks continue their upward trend, bonds may become less appealing to investors, which would cause rates to rise. The market is also a bit overly focused on Trump's tax plan. Tax cuts historically have been good for the economy and therefore bearish for bonds. So with that said, for the short term, the next 1 to 2 day locks, I'm taking a short position as I anticipate pricing to weaken, which will lead to higher rates. For the long term though, 30+ day locks, I'm taking a neutral position as I expect the market should stay close to open, plus or minus about 25 basis points. Bottom line, having been a mortgage advisor for the last 20 years, I'm always looking for ways to maximize your tax strategies, lower the amount of interest you pay, and deliver to you the right home loan product at the right price. If you're in the market to purchase a home, or you're even considering a cash-out refinance, give me a call at the office. I've done this for 20 years and been very blessed to have provided financing to over 25,000 families. I'd love to help you with your home financing options. Your dream home may already be within your reach.